The American shale gas revolution has driven domestic natural gas prices to near record lows. What follows is Stratfor's assessment of how the shale gas revolution will play out internationally. To be a player in this industry, having shale gas formations isn't enough. You also need ample volumes of fresh water to inject into the formation, a pre-existing gathering and distribution infrastructure, competent firms with robust knowledge of the local geology, and a lot of capital to fund the projects. While few states come close to meeting these criteria, there are only two that meet all four. The first, unsurprisingly, is the United States. It boasts the world's most developed natural gas collection and distribution infrastructure, the world's deepest capital markets, at least a dozen regions with significant shale gas resources, nearly all of which have local water supplies, and more firms familiar with hydraulic fracturing technologies than the rest of the planet combined. The result of this magic mix is that the United States has been so successful in extracting shale gas that there is now a massive glut. In fact, natural gas prices have now plunged so low that there isn't a significant player in the market who is even drilling for unassociated natural gas. What new supplies are coming online are almost wholly associated natural gas produced as part of shale oil development efforts. Firm data does not exist at present, but Stratfor sources in the industry estimate that upwards of 40% of total natural gas production in the United States is now, in essence, a waste product. This oversupply has pushed natural gas prices in the United States down below $2 per million BTU. Long-term price estimations are always dicey, but considering that the average wellhead cost before the glut for leading firms was in the vicinity of $3, it is difficult to envision prices rising much above $4 for the foreseeable future. Should that price forecast hold true, the United States will continue to have the cheapest natural gas prices in the world, and it is only a matter of time before Americans will start exporting their ultra-cheap natural gas to other markets. Mexico will emerge as a major consumer of American piped gas, likely in 5 to 8 years, but most of the American surplus will be cooled into liquid form and shipped via specialized tankers from facilities on the U.S. Gulf Coast. First exports are likely in 2017, with the goal of hitting 90 billion cubic meters per year early in the next decade. Stratfor projects that due to proximity, the majority of that LNG will be sent to Europe, where it will have a demonstrable downward impact on local natural gas prices. It is very likely that within a decade, the Americans will be the second largest supplier of natural gas to Europe. For the top supplier, Russia, which regularly uses its energy supplies to reward friends and punish competitors, this will be a massive challenge. American natural gas is in part a waste product, so its cost is very likely to be in the vicinity of a third of what the Russians are currently charging. Such a low price is actually below the cost of production and transport for Russian natural gas. Russia will not be the only loser. Traditional European suppliers Norway, Algeria, and Libya will have to compete to lower their own costs of production in order to maintain European market share. So too will major LNG suppliers to Egypt, Nigeria, and Qatar, who will likely have to ship more of their product to the Pacific, where American LNG, while not absent, will not enjoy low shipping costs. Unfortunately for these LNG players, the final country that has strong shale gas prospects is located in the Pacific region. That's Australia, which has substantial shale gas resources in the vicinity of pre-existing infrastructure. Like in the United States, multiple basins near different infrastructure raise the possibility of Australia massively expanding its natural gas industry. Even better for the Australians, they have huge volumes of coalbed methane, another type of unconventional natural gas, that appears to have development costs even lower than American shale gas, and Australia already boasts an existing and expanding LNG export industry. It's the one place in the world where the American shale gas revolution could not only be replicated on a similar time frame, but because of existing LNG infrastructure, perhaps even a bit faster.